I'm Tom Sutherland with Cushman and Wakefield. Bill asked me to talk about co-working. Just a little bit of background. In 2015, when I sold my firm, Case Commercial Real Estate Partners, to Colliers, not long after getting to Colliers, I was introduced to the co-working industry. I had a young man join my team, Ryan Hoops, and we were in Boston and at a meeting, and he wanted to show me a WeWork location and introduce me to co-working. Having done some in my past, done some flexible workspace stuff with Regis and other executive suites, I was really amazed at the co-working way of doing flexible workspace. But what really drove my interest in it is having done for now 30 years corporate work, doing a lot of portfolio work. I really felt since the last financial crisis in 2007, 2008, I had seen for the first time a fundamental change in our national accounts, not wanting to do longer term leases as much. World economy had just brought on so much rapid change, and the idea of having flexibility was being driven harder than I've ever seen it. So Ryan and I built a team to specialize in flexible workspace, and we, for 16 and 17, we probably met with 75 different operators, including WeWork and Industrious and all the big brands. And over the course of that time, we probably represented 11 or 12 different flexible workspace operators. We're now at Cushman. We left Colliers. We have a 5-person team. We still do predominantly corporate portfolio work, what we call broker-led portfolio work, but we also do a lot of co-working. We're primarily focused with one client right now, Venture X. They've asked us to do that. We still have a few others that we represent. Venture X is the fastest growing co-working brand in the industry, and they're doing that really because their capital growth is through the franchise model. Prior to COVID, we were working on 35, almost 40 transactions for Venture X worldwide, throughout North America. We were in London, Australia, Mexico City, Costa Rica, and I forget somewhere else in South America. So with COVID, the coronavirus, a lot of our work has slowed down. We're still working several transactions. We've got 2 into leases right now. We've got, 8 or 9 we're working through letters of intent. And most of the reason ours slowed down has really been one of 2 things. It's been a lot of landlords that we've been negotiating with wanting to hit the pause button and figure out where co-working flexible workspace is going. And conversely, we've got a lot of our investors, franchisees, who want to hit it on pause to see where the office market's going and see if they can get a much better deal on rental rates. And so some of those we're still kind of finessing along. And that's kind of what we do. So I'll open up for any questions. Anybody wants to talk about co-working, flexible work.
So, hey, Tom, so are you saying that of the 35 deals, 9 are still working?
More than 9. We have 2 into leases, and I would say we have 9 to 10 letters of intent, and then we're still working other ones. It's just kind of a lot slower.
Okay, and so are you seeing landlords backing up more than the operator? Because I would think the operator's got to be having a lot of stress in whatever unit's open, right?
Well, I would say honestly for us, it's more the operators backing out right now, wanting to put it on hold.
That's what I would think.
I mean, we always have. Look, it's very unique for us, or for me in my business background, that one of the things we know when we go into a market and we get a new franchisee, there's going to be 20% of landlords, developers that don't want to do co-working. So we try to call that out real quick, and then only focus on getting in negotiations with those that want it in their building. And so that hasn't changed. Most of those have wanted it in their building still, but some have put it on pause to say, let's shake this out. We hear of all this horrible stuff going on with WeWork. which, by the way, has nothing to do with the demand. WeWork's troubles is solely based on their capital structure and their rapid growth, trying to be a technology company. But the demand for co-working has not changed. It has temporarily because people can't go to work.
So do you see them reevaluating how they lay out co-working, or is it going to be, are they just doing it on a temporary basis and business as usual? What's their view on that? I mean,
well, all of ours that are currently open, and out of our 20 locations that have been open for 2 years or more in North America, my last report was that we were at 72% portfolio-wide occupancy level, and we haven't defaulted on any leases yet. And so for those existing ones, there really hasn't been much change to their current design, because frankly, a lot of people aren't coming in because they're working from home, so it hasn't really been a need. All of our new ones that are in the development program are looking at doing their design a little bit different. One of the things about Venture X that was different than some of the competitors is we were never big users of open space. Most all of ours is private office. Now we'll have 4 people, 6 people in a private office, and in those situations, they're looking to put plexiglass in between those cubes. But the bench seating open, that really has been going out of the industry for many years. That was something that WeWork started early on in its takeoff, when it was having ping pong tables and beer and a different crowd. That we don't see that much anymore. It's never been a very successful market segment.
Tom, can I ask a follow-up question to Bill's question? This is Mike Ablin. How are you?
Good.
So when Steve Lieberman or Alan Shore were talking about retail, they were talking about what they thought were kind of some of the more long-term, kind of not just design shifts, but business shifts. Rand Holman was talking a while back about not just the layout in the offices, but some differences. You just talked about their more closed office and maybe putting up some plexi, but in a broader scale, have you seen any movements to longer, not just a trend, but a paradigm shift of not just putting up some plexi, but some bigger changes to the business model also? Can you talk about that a little more?
Well, you referencing the business model for co-working or just for our office tenants?
For co-working. You're the expert on the call on the co-working and the trend lines, not just shared versus private plexi, but is there anything broader that you can add to the conversation that you think even if you're just sniffing it, you think will stay in place?
Well, Mike, man, it's just we get this question every single day, numerous times. And, the reason I reference office work is because it's co-working is just another segment of office work. And so I don't know that we'll ever be much different than every other general office user. If you look at AT&T's, their new headquarters, they are extremely dense. They look like co-working. It's all glass walls. Their CEO was sitting in a small office in a glass wall. They had multiple people in offices. So when I look at it too, because we still do a lot of corporate work, I haven't seen anybody decide to make long-term changes to their design yet. And I don't know how you can do that 2 months, 3 months into this pandemic. I don't know if anybody really knows. Bill and I have talked about it. I hate the term the new norm. Who knows what the new norm is 2 or 3 months into this pandemic, which is a once in 100-year event. So I find it, again, I'm gonna get off a little philosophically, but it applies to co-working and office space. The struggle I have, and I don't see how people connect the dots, there's a lot, in Cushman, we're opening up our offices officially Thursday. There's all this focus on safety at the office place and what are we gonna do to design and what are we gonna do to de-densify our space. And I can see that short term, but unless we change our entire culture, does it really matter? We're still gonna get on airplanes. We're still going to go to movie theaters. We're still going to go to the basketball games or football games right after work. There's still people going to ride subways and mass transit to work. So does it really make sense to permanently change and de-densify our office space? We just got a study back from Cushman. We've had some great thought leaders, and they did this thing called the experience by square foot thing and have over 4 million data points from 50,000 respondents about what was doing pre-COVID and what was working post-COVID. And the thing we're seeing the most of is what's driving out of this, which I think is a pro to co-working, is the workplace is evolving into an ecosystem. It's basically going to be 3 areas. There's going to be working in the office, working from home, and working in a third-party place. And I think that's going to continue to drive more stuff for co-working. From a design, I mean, right now, I guess we do in some of ours limit the desk. You know, we'll cross out a desk, so you can't sit side by side. But that's because not everybody's coming in.
You know, there's a lot of office building owners, Lucy and Craig, and I don't have anybody in my portfolio that is doing a restack of existing space. And we've got a couple of build-to-suits going, and there hasn't been any consideration for redesign. Lucy, do you have anybody or any volume of people relooking at how they're going to use their space?
We haven't seen anyone fall into action. And
Right.
yet, yes, you know, the architectural firms are out there with a lot of advice and good thinking. And on our own account, well, I can give you a snippet. So we're bringing everybody back to the office. You know, I'm sick of this stuff. And instantly, Henry, my husband, comes down with COVID. Well, that sort of makes me look a little ridiculous. So we're all back home again. And yet we're going to get on back there really quickly. And we're now thinking, well, maybe the accounting department could stay home because the culture of the company has got to be held together. In fact, we have got to go re-energize and reignite the culture of the company. People are getting a little lethargic in this environment that we're in, and we're losing a lot of our energy and synergy and creativity. So I think that you may not change your layout right now, but people will continue to do things very differently for the next, say, 6 months. And certainly major corporations that have got, you know, they're publicly held and all, will have to do things differently in the end. They'll have to have different procedures, just as we've all done in our buildings and the standards we've set for the health of the building.
Craig, do you see anybody in your buildings restacking or doing anything dramatic yet? You're on mute. There you
I
go.
wouldn't say that I've seen it yet, but I actually do think we will see it.
Yeah.
We're in some conversations. I think there may be, which is a good trend for us if it happens, there may be more square foot per person and kind of a redensification and or de-densification. At least that's some hope.
Hey, Bill, this is Jason.
Yeah.
Veridesk and with Barry now. So as we've been redesigning some of our client spaces that we've already put in, and we're going through some conversions right now that are looking at simplifying and just kind of de-densifying. So we are doing that for some clients, and there have been requests for it, and we had some clients that were looking at VeriSpace that have actually tweaked the designs, current tenants, as well as some ones that we're finalizing with that we're tweaking the designs even before they would move in August to the South Lake location. So they're definitely asking about it. And so I think it's going to continue to evolve, but I do agree with what Tom said. It's going to ebb and flow and change, and we don't all know what the rules are going to be. But I was talking to Lindsay at Corrigan. Their concept was it's going to hit these air pockets, and as a vaccine comes out or some other things, it will just continue to evolve over time.
Yeah. Hey, Bill, I would add, and that's a great point on the Veridesk. VentureX is working on a relationship with Veridesk and looking at some of their new furniture. The other challenge from a co-working standpoint to make drastic change to your design now is their pro formas were built on those density levels and the underlying base rent they have. So that's a challenge for those that are in existing. as we move forward, and that's again why a lot of our guys are putting it on hold, if they can get what is 60, 70% of their operating costs, their rent down, now the new design can be a little less dense and they can perform it out and make it still cash flow. But it's tough for those that are locked into leases that built the design at 14 per thousand, knowing you're never that dense of workers in their space, but you have that much revenue space to work with, and you have an underlying rent. It's tough now to say we're going to take a third of those seats out with that base rent that we're paying. It's tough to make that model work.
I don't like the reduced rent part of that conversation.
Yeah, I know. I understand.
So, Tom, what's the break even in the existing leases, co-working leases, and then what would be the break even in the new? I mean, how much is rent going to drop to be able to set up a different break even?
Well, I think it's a good, very good question. So I think your break even will stay the same. It will be that you have less density, so your revenue is less. But if your operating expense goes down too, your break even still stays the same if they go proportionally down. So right now, for most of ours, their break even is about 65, 70% occupancy level.
And how much of your operating expenses rent?
About 60%.
So then if you spread out, then your break even is going to go up to in the 70s or higher on a percentage basis if rent doesn't change.
If rent doesn't change.
Yeah. That's my vote.
But then you deal with too is what is the going price of a 2-person desk? Does that go down? Frankly, for those co-working companies that will survive COVID, because there will be a thinning of the herd. It's just like every other asset class. There's those that are undercapitalized that aren't going to make it through it. Most models will show you that it's very difficult. It's a challenge to make money if you're less than 15,000 feet in co-working. It doesn't give you enough revenue space because your program's going to stay the same of your lounge and your conference rooms. That program, which is going to be 30% of the space, is going to stay the same whether you're in 10,000 feet or 30,000 feet, or that 6,000 feet that goes to non-revenue space. So you got to have enough revenue space to make it work, and it's tough to do that with less than 15,000 feet. And those guys won't make it; they're getting wiped out.
Any other questions of Tom?
Hey, Tom, just one more. So that whole shift that Industrious and everybody went to where it was more of a management deal and they weren't actually signing a lease with all these asset owners versus VentureX is obviously signing leases and you've got a franchisor. Do you see a shift in that, or have y'all thought about how that's going to continue to evolve over time? Because it seemed like Industrious and all them shifted and pivoted to trying not to really be not on the hook for leases and put all the risk back on these building owners.
Yeah, it's a great question. Honestly, I believe what drove that is outside of Regis, Spaces, IWG, and WeWork at the time because of SoftBank. Everybody else didn't have enough capital to really grow as rapidly as meeting the demand that we saw there. And again, real quickly on demand, in the U.S., we're about 3% of our office space is flexible workspace. If you compare to London, it's 15%. And most people think we should be at 10 or 15% in the next 10 years. So for the demand has been exponentially growing. It's been growing rapidly with enterprise users. But to your question is, so a lot of operators wanted to grow and meet that demand, but they didn't have the capital. So they were going to do these partnership agreements with landlords. We do think VentureX is uniquely situated because I still think most landlords would prefer not to. They would, Bill and the other landlords on here could say most of them would still want to create value in their asset with a long-term 10-year lease, but it has to be underwritten well. And that's also a challenge in this industry. But with the franchise model, which is brand new to me, learning it, because I've been in office my whole life. I've seen, especially going through COVID, some tremendous benefits to landlords and to us, obviously, to be able to weather this storm easier than somebody who has one single capital stack that's getting knocked out across all of its portfolio. We're isolated individual locations who have all gotten the SBA money. They're getting band-aided. They're getting funded through. and and able to sign long-term leases.
Anything else? Tom? Tom, I appreciate.
One
Yeah,
more
go ahead.
question, if I could. Do you see any nibbling at the edges from people like us in apartments where we're now building in co-working spaces that are more of consequence, or potentially from the hotel industry where, if a corporation, if a hotel system has a good set of co-working spaces, the corporations don't need to be renting them, from Industrious or you guys or, any of these.
Yeah. No, it's a great question. We've been approached by apartment users. We're now getting a lot of retail developers approaching us, obviously, and some hotel operators. We have one in Chicago. Nibbling at the edges, maybe. I don't know. Most of those that I've seen, they're not like, big 25, 30,000 foot spaces. They're smaller. They're not built on a revenue model. To me, they really seem to be either built as an amenity to that asset, whether it be the apartment or the hotel. So I just think that's a different user. I'm not sure how much they even charge people, if anything, to use that space. I still think there's plenty of demand out there just in the corporate world for flexible office space. I do think there needed to be some thinning out of the competitors, which will happen through this process. There's so many.
Else? Tom, thanks. Appreciate it.
You bet.
Now for some good news, Mike. Maybe just kind of what the theory here is what you were seeing on companies looking to come to the Metroplex or Dallas area pre-COVID, post-COVID. Kind of what you're seeing would be wonderful.
Yeah, thank you, Bill. Thank you, Linda. Thank you too, and many friends of the chamber on this call. It's nice to see you all. I want to hunt. I'm going crazy as well with Zooms and Microsoft Teams. I want to be out in California and places we need to be to keep that momentum going, and we will get back there. We think of 2019, this region was a national champion. In fact, it was our third straight year to be a national champion in terms of job growth, corporate gains. We added 128,000 net jobs in 2019. You'd had to combine Chicago, Austin, Texas, Nashville, Tennessee, and Denver, Colorado, combined their net job gain, and you still come a little bit short of what we had as one region. We'd have been the fourth largest state in job gains if we were a state. The projects in our pipeline were very strong, Fortune 500 headquarters, relo. And here's something that I think you'll really enjoy. In November 2018, Amazon said we're going to go New York, we're going to go DC, 25,000 jobs each. So if we'd have been a player in that and won a piece of that, won those 25,000 jobs, that would have been fantastic. But we were on pace by the end of this year to have won 25,000 high-end corporate jobs in projects like Allstate, Microsoft, USAA, Infosys, Uber, all of those. So we're on a tremendous pace and really a sort of a national champion caliber region, and we all know that and appreciate it. And you're a big reason why we are able to do that. Right now, we're tracking about 70 total projects on our book. Now that's early data stuff. That's projects that we're close to announcing right before COVID. In fact, we had 2 press releases done that had to be put on the shelf. We have picked up 17 projects since March 13th. That's sort of our marker for when COVID really kind of sunk in and caused a lot of folks to hit the brakes. 17 projects. Most of those are manufacturing and industrial logistics projects. A couple of those are big offices. We hosted the week of May 11th, did our best to have a virtual tour for what we believe to be a biopharma, sort of an HQ2 project for a major biopharma. And so we're seeing activity. It is not as robust. It is not as frequent. And a lot of those 70 projects, again, 53 of those were on our books prior to March 13th, and many of those have paused. They're not lost. They're not over. They're just paused. And I'm sure that paused includes rethinking configurations, rethinking a lot of things. And some of them may fall off, and we'll pick up a bunch more as companies fire back up. I think, we've got a Fortune 500 headquarters reload that should get more active this month, and we've seen some big distribution facility. So I'm optimistic about a big rush. And some of the reasons I'm optimistic, some of them are pretty simple. We're still Dallas-Fort Worth, and we're still Texas. So we still hold this basket of location advantages that we had and we're exercising very briskly 4 or 5 months ago is still there. And we may have picked up some advantages in the last few months. It depends on what everybody's reaction to density is. Density is one thing, but there's a lot of technology to overcome that. And I agree with what was said earlier about, New York's probably going to return to be a lot like what New York was, right? Because you can impact and affect density and move people around different use technology. So I'm not sure there's going to be this huge run from density that we are hearing, just a mass out migration. I'm sure it'll have some impact, but nevertheless, this region, we're big. We're the 4th largest market in the country, but we have optionality for companies that are sensitive to density right now. You can be as dense as you want to be in our region, but you can also spread it out a little bit if that's what you want to do. So we've got nimbleness and flexibility around that. And of course, the real estate community makes that possible. You have noticed our brand as a region has elevated with tech. What Mark Zuckerberg came out and said, several days ago that, hey, we're looking for top tech markets in the country. We're going to look at Dallas, Atlanta, and Denver, and we're going to do some remote hiring, and maybe that will lead to a physical space down the near term. That's fantastic. We've worked hard as a region, as a chamber, with all of our partners to get DFW top of mind when it comes to tech companies, high end, the unicorns, the big stuff. They create thousands and thousands of jobs. And for Mark Zuckerberg to come out, do his research and realize Dallas is one of those places, would that have happened 5 years ago? Would he have said that 10 years ago? I'm not sure that he would have. So that we've got the advantage of our tech brand has continued to blossom. And I think it's going to get even stronger. Amazon sort of did the same thing. They came back here for their hiring fair. Some of these states that are source markets for us are tremendously fiscally challenged. I think I saw the other day where California is looking at a $54 billion budget deficit. We're not going to escape that. There's no doubt about it. Texas and Dallas, any city in this state is going to be hit hard. But $54 billion, our whole state budget for 1 year is about $125 billion. So there are going to be companies that are going to say, we need just a better sanctuary type of location for the long term. And it's going to continue to drive stuff out of California. And so I think we'll be very, very busy. As soon as I can get on a plane out to California and get some meetings, I will be out there. And another thing I think we will see, Texas through all of this, I think the brand of Texas has also elevated, and the brand of our region with that as effectively dealing with this crisis is once again, there's Texas sort of leading the pack and doing smart things, being business friendly. That's going to benefit us. I do expect, by the way, for your team members that look for leads and everything, of course, we do some of that, but the state of Texas is going to get a lot more calls from companies. So I think we will see as a chamber a lot more deals coming to us from the office of the governor than before. We keep relationships up with site selection consultants. In fact, the first rush will be largely industrial as manufacturers and distribution operations look to kind of respond to reshoring and expansion. We'll see what that turns out. We're strong there, but so are a lot of other places in the country. I'd rather see a big rush for headquarters relocations and major offices because that's really our strong suit. There's a lot more competition when it comes to industrial. The site consultants that we know well, about 3/4 of them think that the work from home, there's some permanence to that. And I also agree, that we'll see. I don't like new normal either. I think we'll be a lot more normal in the future, depending on science and other things. But there will be some impacts, and I love the ecosystem comment earlier. I agree with that. Some of the things, that will keep me up at night. I did a list of those a couple of months ago. Things for the chamber to think about, for me to think about in terms of future economic development success. I've got 5. I'll share them very, very briefly. One thing I'm concerned about is our air transportation superiority. All right, there is no doubt that the success of Dallas-Fort Worth International Airport, the success of Southwest Airlines, and the success of American Airlines is hypercritical to our success going forward. We've built on them. We've built on that strength. It adds, you all know what that adds to our ability to recruit corporations and get people and exchange cultures and have events and all that stuff here. Those three, and I don't mean to leave out Love Field, but those three in particular are so critical to we got to get them through this, and they've got to make it through this. We're going to keep our strengths as we know them. Small businesses deserve a lot of attention, but you know what? I think this is a time to pay a little bit more attention to the retention and support of our major companies, our major headquarters, our major employers. They're important too. You think back in history to towns that sort of took a downturn. It was usually when that one big employer had a slowdown or was shut down, or whatever happened to that town. Usually it's a result of impacts on the big side, not necessarily a loss of some small business. It's all important. And right now, small businesses deserve our focus, but so do our major employers. It's time to refresh our corporate targets. We're going to be doing that as a chamber. We know, what does this environment, maybe the de-stressing of the talent issue a little bit, maybe the de-stressing of our accelerated costs that we've seen over the last couple of years as we've risen in success and prosperity. Costs have gone up, so other markets maybe we're a little bit more attractive to some of our projects, but to reassess corporate targets right now for recruitment is important to us. And then a couple of other things that I really believe are just opportune times. Education. The more we can have the ability to invest and be innovative and flexible in education right now will bear fruit, not only for this year, but the coming years, and we'll do a lot to determine our economic development success 5 or 10 years from now. So right now is a great time to invest in education. It's difficult, but our talent, our young people need it, and we can emerge with a brighter shining star if we're able to figure that out. And then the last thing, and I'll be quiet, is regionalism. We're a regional chamber. We work with all the communities in this region on corporate deals, and we market together and we do things together. We stay knitted together in friendship and cooperation, maybe like a pack of lions. Eventually there's prey on the ground, and even the lions argue over who gets the leg, but they hunt together, and we do that. And I think as our region grows and expands physically, we're pushing 8 million people now. It's going to get harder and harder to maintain that regional spirit. I think that's true in economic development, and so that's also something that keeps me on my toes, and that'll be a challenge for us as we go forward if we want to continue to win. So that's just some of my thoughts, very, very rapid fire. I apologize for that, but thank you all for your support and everything you do to make economic development corporate recruitment possible in this region. We appreciate you.
Mike, do you see any, a lot of people are talking about maybe the move to the suburbs where people aren't going to want to be downtown or uptown. They're going to want to spread out and have more suburban type offices. Are the people that are inquiring about Dallas changing their view of where they want to be, or is it pretty much?
No, not yet. Not yet. I mean, we just haven't seen it. Again, we haven't seen a lot of recasting. We are fortunate to get a good mix of all types. We get the campus, those that want a campus. We get those that want to attract the young people and the urban talent and want to go vertical and want to go dense. But no, I have not seen anything yet that makes me comfortable about suggesting there's been a shift there. I think a lot of these projects that we work with are maybe going back to the drawing board a little bit and rethinking, and they're just trying to figure out what their employees want. But no fundamental, and that was said earlier too, mentioned a couple of times, no fundamental sort of absolute trends have shown for us. Even talking to the site consultants, they all think that the density is going to be a big issue, but they can't really demonstrate how and why, and they really can't, give examples, at least where we have a lot of statistical confidence in those examples of that happening just yet. But again, the strength of this region is you can go any way you want to go. You can have a campus in downtown Dallas if you want to, even, right? So I love that flexibility. And I also love, in addition to the real estate community, which is the best in the country, we've got, the architecture and design community, the construction community here is second to none. So if there's any place that's going to figure it out and deliver product, it's going to be us. And we'll do it in a cost-effective way, and we'll play all of our other advantages in. So I can't help but be even though I want to get on an airplane and go hunt, can't do that like we used to do a few months ago. I'm very optimistic.
Any questions from the group?
So Mike, thank you for being here today. I really appreciate it. It became really clear to me when we had Dale Petrosky speak to our young professionals last week that there is an increased interest in Dallas-Fort Worth. Is there any difference between the prospects you had before COVID and the prospects that have surfaced since COVID? Any kind of metric that you could point out that's something that we could
Yes. Yes, and of the 17 projects that have generated since COVID, most are industrial in nature. And the site consultants a few months ago would have predicted that, just a more quicker response and more of an urgency around those. But no, the mix overall is still pretty typical. But prior to COVID, we had 10 headquarters. We've picked up 2 major office projects since March 13th and have several other corporate office projects. So it's nominal what we're seeing. And the volume is nominal too. I remember compiling some numbers for our DRC 2020 annual report. We were doing those at the end of 2019. We had 68 total projects of all stripes in our book of business. Now, most of you know this, but some may not. We're focused on the net new to the region. So you're not going to see the DRC. We might accidentally be pulled into something for a while, not realizing it, but we're not intra-regional. So those 68 or 70 projects are all net new to the region, but we're 70 now from 68 at the end of 2019. So activity is brisk. And I just think our region's brand and the desire for companies who want to be in Texas and have all the amenities you've got here, but at a more effective price point is very compelling and will be more so in the coming month.
Any other questions? Mike, I appreciate your time.
Good to be on. Thank you.